Hi class. Today we're going to look at P7-8B, which is in your textbook, very similar to P7-8A in your homework. And I've created a template for us to work through this. So the instructions on page 367 say New Delhi is in the process of closing its operations. It sold its 3-year-old ovens to Sicily Pizza for $341,000. The ovens originally cost $455,000 and had an estimated service life of 10 years and an estimated residual value of $30,000. New Delhi uses straight line depreciation for all equipment, which makes it a little bit easier because straight line is the simplest way we can do this. So we are to, in requirement 1, calculate the balance in the accumulated depreciation account at the end of the 3rd year. So to do that, we are going to use this formula. Accumulated depreciation equals original cost less residual value divided by estimated useful life, and then we're going to multiply that by the number of years that we've used this piece of equipment. So first we have to figure out the amount of depreciation each year, and then we're going to multiply that by the 3 years that we've used this equipment. So if we look back at the instructions, we had a piece of equipment that was $455,000 and it has a residual value of $30,000 and an estimated useful life of 10 years. So if we do the math on this, $455,000 less $30,000 divided by 10 years, and then we're going to take that amount and multiply it by 3 years because we've used that equipment 3 years. It says that they've had it for 3 years and now they're liquidating. So we're going to take that total amount times 3 years. And if we do the math for that calculation, we should come up with $127,500. So that's actually the amount that goes in the box in your homework. So I'm just going to highlight that there. So that's actually the answer. So the template that you have, and let's just look at it. The template that you have for your homework has some boxes that are highlighted. So you're going to put in your original cost less your residual value, and then over your estimated useful life, and then this right here is I'm sorry, that's your residual value, or by 2 years, because you're going to have it sold at the end of 2 years in the problem for your homework. And then this will be the actual amount that you've accumulated. So your template's going to look a little bit different than mine, but still the same process. All right, so look back at the book. It says requirement 2, calculate the book value of the ovens at the end of the 3rd year. So we've got a cost of the oven, and that's given in the instructions, is $455,000. Less your accumulated depreciation, and this actually comes from requirement 1. So we calculated the accumulated depreciation already in requirement 1 that we've taken. So in this case, we are going to subtract out the amount that we got in requirement 1. Oops, that should be a minus. Gives us a book value at the end of year 3 of $327,500. So I'm just going to make note of this. That goes there. All right, looking back at the book, it says requirement 3, what is the gain or loss on the sale of ovens at the end of the 3rd year? So we have to know how much we sold the ovens for. And it says we sold the ovens for $341,000. So that actually goes here. And then we're going to subtract out some things. We have the cost of the ovens, which was $455,000, and that amount is given in the instructions. And then less our accumulated depreciation, which again is this amount that we've calculated up here. So that's less $127,500. Gives us the book value at the end of year 3 of $327,500. So our sale amount was $341. Our book value is $327. So we actually had a gain because we sold this for more than the book value. So the gain in this case was $13,500. Let's see. This also goes down here. And this book value should be the same in both of these charts. In your homework, I believe that you're actually selling these for a loss, so you're going to come up with a negative number there, so just pointing out a little bit of difference in the two problems. Then it says requirement 4, record the sale of the ovens at the end of the 3rd year. So we've got to make a journal entry. So to do that, we're going to record. I like to record what I know first and then kind of back into the harder ones. So the instructions say we sold the ovens to Sicily Pizza for $341,000. So I know we got $341,000 worth of cash. That's, to me, the easiest part of this one. All right, when we sell equipment, we have to get rid of the equipment off of our books. The other thing we have to get rid of off of our books is the accumulated depreciation that we have. So if you remember, when we purchase equipment, we record that in the equipment account. And we don't really do anything with that equipment account as long as we own that equipment. We record the equipment in there, we purchase it, and it stays there. We don't write it up or write it down directly, anything else in that equipment account. So the equipment, when we purchased it, was debited to the equipment account for $455,000, which was the cost of the oven. So we need to get $455,000 out of the equipment account. So we debited it to put it in the equipment account, so we're going to credit it to take it out. So we're going to take the full cost of that oven out of the equipment account. The other thing we have to do to take that equipment off the books is to get rid of the accumulated depreciation that's associated with that equipment. So we said we had $127,500 worth of accumulated depreciation that is relevant to that oven that we've sold. So when we accumulate depreciation, we credit the accumulated depreciation account. So if it's credited to put it in there, we're going to debit it to take it out. So we're going to debit accumulated depreciation for the amount that we have put in there for those ovens, which is $127,500. And then I have a blank here. I need to figure out what goes there. So if you remember basic rules of accounting, debits have to equal credits, and they do not at this point. Our debits do not equal our credits. We got $455,000 over here, and if you add these two together, it's $468,500, so not equal. So we've got to figure out what we need to do to bring these amounts into balance. So if we have $468,500 in debits and $455,000 in credits, it's going to take $13,500 to make those amounts balance. And the amount that makes those balance is due to the gain on the sale. And you can just put gain if you want to put the gain on the sale. But I do want to point out that we calculated that up here. So that amount is the same as the gain. So you could just go up there and look and see what it is and put it down here. Or you can do what I did and just try to use it to figure out what it is by coming up with a plug number that makes your debits balance with your credits. Now on your homework, I believe you have a loss on the sale. So if you have a loss on the sale, instead of a credit for a gain on sale, you're going to debit loss on the sale. So that's going to be the only difference. But the rest of this should be the same. If you've received cash from the sale, you're going to debit the amount of cash. And to take any kind of asset off of the books, you're going to credit the asset account for the cost, and you're going to credit or debit accumulated depreciation for the amount of accumulated depreciation that you've taken up to that point. So this entry will be a little bit different on your homework because of the loss, but otherwise should follow the same pattern. And that's all there is to P7-8.